Now, obviously, once you've found a solid trade setup that fits your trading strategy, you need a way to get involved in that trade. So we're going to use this example right here. And what we're looking at is the prices come back in to this area right here, which we've identified as a support area. We see the price moved up here, ranged, moved back up, came back down, and obviously went up again. Obviously we're doing this in hindsight because we are trading at the hard right edge of the chart, but for demonstration purposes it's the concept that I want you to understand. So we need a way to get involved in this trade. There's different ways that you can get involved in trades. In this example, I'm just going to simply use price. As price comes back in and enters our area here, we want to start putting an order to buy when the market breaks back up. As you can see, price pulls back in on this candle right here. Let me just mark that off. So we put an order to buy right above this candle. This price makes a lower high, so we would move the entry price down. Oops, wrong. We don't want to use that, but whatever. We're just below the top of this candle right here, putting our stop below the swing levels that are formed. And you can see, even as we move further over here, price moves into this area here. This has a reversal candle. But if we're trading with a strategy that when the price comes back in this level, we start trailing our orders to get into the trade above the candles. We put an order to enter. It's called a buy stop above this candle. If it doesn't trigger in, and this candle makes a lower high, be the top of this candle, until we're triggered into the market. In this example here, we're just going to use a standard indicator. This is the stochastics that you see right here. And I want to make sure that you can see, so I'm going to have to drag this up pretty high so you can see the bottom of the stochastics. There we go. So we're going to use the same area. Okay, so we're not, picking and choosing to make things look good. Price comes back into this area. We look down to the stochastics, and as soon as the fast line crosses over the slow line, which happens right here, we look to get involved in the trade. Once this cross happens, the momentum has changed from a downward momentum to a bullish momentum. We were looking to get into trade at this. Now you can either trade just the cross of the stochastics as your entry trigger, or like we did in the last example, simply start trailing a buy stop to go long in the market.